The following examples will explain how your financial transactions work through your systems to produce your financial statement. Back in the early days, before computers, the early books were recorded, believe it or not, in actual books. So I'm going to represent our books pictorially as an open book. The left-hand side of the page will represent debits or money owed to us, and the right-hand side will represent credits or money we owe to others. That is at least the case for the balance sheet accounts. In the case of the P&L accounts, this flips over, so the debits represent our costs and credits represent income. So I'll be showing the profit and loss accounts below this line and the balance sheet accounts above. We've purchased stationery from John at a cost of £200 plus VAT of £40. To reflect this transaction in our books, we enter the £240 that we owe to John here within our creditors, or people we owe money to. We also need to take account of the £40 of VAT that we'll recover from Customs and Excise. This is reflected as a debit, as that money is due to us. The two figures net off to become a cost of £200. We also reflect a debit of £200 in the P&L, our actual cost, under the expense category stationery. So we're left with a debit of £200 and a net credit of £200 in the balance sheet. We now sell consultancy services to Fred for £500 and VAT of £100. So we reflect the total owed to us from Fred within our debtors, or people who owe us money. We reflect the £100 of sales VAT on our credit page of our VAT account, as this time we owe HMRC the money. We're left with a net debit of £500 on our balance sheet, and this is entered in our sales account within our P&L as a credit. Now we pay John for the stationery we purchased earlier. So we credit our bank account, we're taking the money out, and we debit our creditors. Now we no longer owe John anything. Our creditors balance to zero, so we have none. Also note that our bank account is in credit or deficit. Let's hope that we've remembered to arrange an overdraft facility. We sell more consulting services, this time to Steve, for £400 plus VAT. So the total including VAT is owed to us by Steve and reflected within our debtors. Again, we have to account for the sales VAT that we owe HMRC. The net effect in our balance sheet is a debit of £400, and this is reflected in our P&L as a net sale of £400. Here we calculate our VAT return. So we note that we owe HMRC a total of £180 for the sales to Fred and Steve. This is called output VAT. And HMRC owe us £40 for the purchase of stationery from John. That's called input VAT. The net effect of the 180 minus the 40 is 140 that we owe to HMRC, and we make this payment by crediting our bank account, further increasing our overdraft, and debiting our VAT return. This clears, the net effect is this clears the VAT return. There's 180 here and 180 here with nothing to pay or receive after we've made this payment. As these are balance sheet accounts, balance sheet transactions, there's no actual net effect on our P&L. Fred pays us the £600 he owes us, so our debtors are credited and Fred no longer owes us any money. His balance is cleared within our debtors, and our bank, we receive another £600 in our bank account. So the trial balance is not really a statement, it's more of a list of the balances of all of our accounts. And if we start with the balance sheet accounts, the bank, we had 600 coming in and 380 coming out, so that left us with £220 in our bank account. We could check that by looking at the statement at the end of the month. In terms of debtors, Fred had actually paid us, so his account is clear, but Steve still owes us £480. So we have debtors, people owe us money. Steve owes us £480. We'll put that in. As we mentioned earlier, the VAT return was done and there was no balance on that. We have 180 on each side there, so it's clear. And so is the creditors, because we had paid John, so we owe him nothing. And for the sales, we have £900 worth of sales in a month, which we put in there, and we'd purchased the £200 of stationery from John, which we've put in there. So if we add up all of our debits, we get 900, and if we add up all of our credits, we get 900. Therefore, our trial balance balances. So to the profit and loss account. This is a reflection of all our activities during a period. In our case, it's for the month of January. But if it was for an annual set of accounts, it would read the profit and loss account for the year ending a particular date. So going back to our example, our sales for the month were £900 and our expenses for the month were £200. And I said that we flip the debits and the credits around for the P&L, so that here the sales are represented as a positive and our costs are represented as a negative, and we end up with a profit of £700. So our balance sheet is really just a reflection of our value at any given time, or a list of assets or liabilities. Here it's the balance sheet as at the 31st of January 2020. We normally start with assets, and within the assets that we have here is a bank account, so we have a bank balance of 220 and debtors of 480. So our total assets equal 700. We would normally take away our liabilities from here, but as we've paid our VAT and our creditors, there are none, so our net assets are also 700. And this is normally financed by things like the capital that the owners would put in, or long-term debt, or any retained earnings that we've made from previous earnings or losses that we've made from previous years, as well as this particular month. So here in this case, our profit figure was 700, and as the fact that the retained profit and the net assets equal, this means that our books balance. Voila! Just two final things to note. You'll notice our profit is £700, but our cash balance is 220. Profit does not equal cash. You cannot spend profit, only cash, and that's a very, very important thing to remember. Secondly, these balance sheet accounts, they are effectively control accounts, and each of them can be verified independently, i.e. by bank statements, creditors or supplier statements. If they're regularly reconciled, they form part of your internal control systems, and these will help to prevent errors and fraud. Finally, I'd like to thank you for watching and listening and persevering.